Welcome back, my friends. By now, most of the earnings for big tech companies have been reported. Wall Street analysts were expecting a weak quarter, and that is what they got. And it was not pretty. Well, I guess we all knew it was coming. But the question is, how bad is it really? When will things recover? And, to what extent will things recover for big tech? The days of outsized growth of big tech companies has come to a halt. There is still growth. But that growth is in line with old economy companies. So, will big tech companies just become part of the old economy? If that happens, what happens to the valuations of big tech companies? And what will happen to venture-backed tech unicorns that never reached profitability? All of these are very important questions. Much of this is because of a weakening macroeconomic environment. But, how much? What does it mean for big tech companies? What does it mean for the economy? And, what does it mean for the future of the United States? But, before we get into all of that, please press the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Aside from Apple, earnings week was a disaster for big tech. Alphabet reported weak financials. So did Amazon. So did Microsoft. And especially Meta. When you combine the lost market capitalization of these four companies, it totals $350 billion. Big tech revenue growth has been slowing to pedestrian rates. Or, in the case of Meta, this is the third quarter of revenue declines. These big tech companies have found themselves in a very unfamiliar position. This comes after more than a decade of unbridled growth. These weak Q3 results come just as inflation is raging in most countries of the world. Central banks in most countries are aggressively raising interest rates. And most economists are expecting a recession. Apple beat expectations of Wall Street analysts for revenue and profit. But one must wonder how long that will continue, especially with weak iPhone 14 sales. That the stock market had a somewhat strong week after months of decline. Except for shares of Meta, that is. Shares in Meta have lost 75% of their value within the past 12 months. And comments by CEO Mark Zuckerberg did not inspire confidence on Wall Street. Meta missed Wall Street expectations on earnings. Meta experienced its lowest average revenue per user in 2 years. And Meta also told Wall Street to expect another revenue decline in Q4. So, where is the good news for Meta? There are a lot of things going on right now in the business and in the world, Meta CEO Mark Zuckerberg said on the company's earnings call. And so it's hard to have a simple, we're going to do this one thing, and that's going to solve all the issues, continued Zuckerberg. Shares in Meta had their worst week since 2012. Meta shares fell 24% in the 5 trading sessions following last week's earnings call. Microsoft gave weak guidance for Q4 and missed cloud revenue estimates. Shares in Microsoft fell 2.6% last week. Shares in Amazon fell 13%. Amazon issued weak Q4 guidance. And Amazon also forecasted a dramatic slowdown in cloud business. Still, Amazon Web Services 27.5% year-over-year for Q3. So, the cloud business is still outgrowing the overall economy. It just is not extending the 50% year-over-year gains that investors have come to expect. I guess you could say that Google's cloud group outgrew Amazon and Microsoft. But that is from a far lower base. Google plans to keep investing in their cloud business, which makes sense. However, they also plan to rein in headcount growth in the next few quarters. We are excited about the opportunity, given that businesses and governments are still in the early days of public cloud adoption, and we continue to invest accordingly, Ruth Porat, Alphabet CFO, said on a conference call with analysts on Tuesday. We remain focused on the longer-term path to profitability. And, I think it is fair to say that this is the general view of the cloud business. There is a temporary slowdown amid a longer-term trend of high growth. Aside from cloud, Google's results were less impressive. Google's core advertising business grew just slightly. Advertising revenue from YouTube's actually fell as compared to Q3 of last year. Amazon saw the situation in reverse. Digital advertising for Amazon grew from last year. Revenue growth for Amazon ad business was 30% versus 21% last year. Advertisers are looking for effective advertising, and our advertising is at the point where consumers are ready to spend, said Amazon CFO Brian Olsavsky. We have a lot of advantages that we feel that will help both consumers and also our partners like sellers and advertisers, Olsavsky continued. We are reducing our price target on Amazon stock to $130 from $164 after the results, said Raymond James analyst Aaron Kessler. Many Wall Street investors are rotating out of tech and software names and into old economy names. But that could be a mistake if tech giants clean house and get their act together. The Dow Jones Industrial Average climbed 3% last week. The Nasdaq Composite had outperformed the Dow for 5 straight years. Believe it or not, shares in Intel actually traded 7% higher in extended trading after the Q3 earnings call. The company also said it will cut up to $10 billion from cost reductions and efficiency improvements. Reports surfaced earlier in October that Intel was planning layoffs. Basically, work, study and playing games were big during the pandemic. So, everyone bought new computers in 2020 and 2021. Now demand is lower because all of that demand was pulled forward. This week Mobileye went public after being owned by Intel since 2017. Intel still holds more than 50% of Mobileye shares. Mobileye makes chips for autonomous driving cars. Intel now really needs new products to hit the market in order to drive sales. So, Intel is really in control of its own destiny. New chips, including the new Raptor Lake and Sapphire Rapids, are running late. As you know, Meta also reported Q3 earnings this week. Meta has been reporting declining revenues for a few quarters now. Shareholders are revolting. Rumors are swirling that the company is preparing for big layoffs. Already, Meta is said to be conducting stealth layoffs without making big public announcements. Meanwhile, users continue to flee the main Facebook platform. I guess you could say that the bright spot in this whole thing is that Meta is still profitable. Meta's Virtual Reality Labs unit is responsible for an outsized portion of the sky-high expenses. That unit is developing the virtual reality and related augmented reality technology. This technology is at the core of what is set to become the metaverse. Meta is dealing with the many issues that all big tech companies are facing. Changes to the Apple 2021 iOS privacy update making it harder for Facebook to target ads. Stiff competition TikTok. So, every quarter will be something of a new experience in seeing how the situation develops at Meta. One thing is for sure. Meta seems intent on using its billions to create something new and innovative. Traders are heavily selling Meta stock. Some Wall Street analysts think that the downward momentum is actually an irrecoverable death spiral. But, what do you think? Please leave us a comment below and hit the like button. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. Thank you for watching.